All right, Matt. So now I want to talk a little bit about Berkshire's earnings. First off, the numbers. When you see this net income number off the top, it's really eye-popping. $21.7 billion. But you need to take a little bit of that with a grain of salt. $15.1 billion of that is just mark to market on the equity portfolio. The S&P was up 13% during the first quarter. And obviously that provided a whole lot of ballast for Berkshire's equity portfolio. So when you back out to the core business, you're looking about $6.6 billion in net income. A lot of cash, but not quite, what you're just going to see from that headline number. But as you dig into the Berkshire's actual operating businesses, Matt, what kind of stood out to you from this report, and what's going on in that part of Berkshire's universe?
I really liked the railroad earnings. The pre-tax earnings were up 10% to $1.7 billion. He benefited from higher rates per car and fuel surcharges, and that big boost came even though there was like really bad weather during the winter and flooding in the Midwest, so that hurt volumes, but they made all that up on pricing. We saw some other railroads do the same thing. Genesee and Wyoming, they reported really strong earnings even though there was all this flooding and stuff. The big things were industrial and consumers, which, your oil, your construction materials. So that hints at a really strong economy. The weaknesses were in coal and agriculture. So it was really good. It shows that investment in Burlington Northern is really paying off.
Yeah, and those railroads kind of fit what Warren Buffett has done in the past. He used to always invest in newspapers. Those are kind of little monopolies. You look at a railroad. We've talked about with pipelines before. Those are little monopolies too. You control those routes. They're not really building a lot of new railroads these days. So when folks need to move things around, they have to go to Berkshire or these other folks. And when the economy is doing well, it really works out for these railroads. I mean, we've talked in the past too about there's pipeline constraints as well, taking away oil from some of these plays. Railroads are a good substitute for that, and so that kind of explains some of where you might see that strong performance in that part of the business. Their utilities and energy also had a pretty good quarter as well, Matt. What did you see from that part of Berkshire's operating businesses?
Yeah, so utilities and earnings there, pre-tax was up 11% to like $500 million. So that was pretty good. But it was interesting. There's a lot of mixed results. They own several utilities, and Mid-American's probably their most famous ones. Earnings there doubled, but a lot of the other ones are up or down. So but that just shows the diversification of Buffett's energy portfolio. And then he had some other energy businesses, like he has pipelines and he has investments in renewables and regulated electricity transmission. Those were down. They reported a loss. So the diversification really helped him. He had just some really good assets out there, and those are performing well, and they're offsetting some weak areas. Yeah.
Again, that's what you get from Berkshire, this super diversified industrial conglomerate in areas where, regardless of how the economy is performing, some part of that business is going to be doing well.